Hello, I'm joined by Anastasia Diolina, the CFO of AFENTRA PLC, to discuss the full year 24 results that have just been issued. So Anastasia, very strong full year results issued this morning. What are the key takeaways for investors?
Thank you, Ben. Indeed, we're very pleased. 2024 was a truly successful year for our business. AFENTRA transformed from a cash shell to a full cycle E&P company. We have completed the last of our announced Angola acquisitions with the completion of the Azule transaction in May 2024. We have achieved the full payback on all three acquisitions, and we now hold 30% interest in Block 305 and 21.3% in Block 305A. Our balance sheet is back to net cash with significant capacity for additional M&A transactions. Our financial and operational delivery was very strong, with revenue of $180.9 million and EBITDAX of $19.9 million. At an asset level, we delivered cash flow of $87.2 million. This is a remarkable achievement given we only had $40 million of cash in the bank and no cash flow generative assets at the time when we formed AFENTRA in 2021.
So you ended the period in a net cash position. What are the implications of that for the delivery of the strategy going forwards?
Financial flexibility is very important, and even more so during the period of turbulence we have been experiencing lately. We have achieved an enviable cash position with $55 million of cash at year end. This cash position and the cash generation from our assets means we're fully funded for the ongoing asset redevelopment campaign and also for our investments we plan to make onshore Kwanza Basin. Our low leverage of less than 0.5 times debt to EBITDAX also gives us comfort that through a combination of the existing cash resources and an additional borrowing-based capacity embedded in our assets, we'll be in a position to finance a future M&A activity without reliance on additional equity. This year, we anticipate to lift around 2 million barrels of crude over 5 liftings, of which the first lifting already took place in February. We lifted 466,000 barrels and we generated pre-tax revenue of $34.8 million. To protect our financial position, we have a structured and measured hedging strategy to provide downside protection. We have hedged 68% of our 2025 lifting volumes at floors of $60 to $65 a barrel. In essence, our transformed balance sheet gives us flexibility to pursue M&A that meet our investment criteria and fund our ongoing asset investments. We fully embrace current volatility and believe there will be meaningful M&A opportunities available to financially strong, disciplined, and patient buyers like AFENTRA.
So the company's laid out 3 avenues for growth. What should investors be looking for next?
Look, we always get a lot of questions related to our M&A plans, and we, as we continually said in the past, actively pursuing value accretive M&A across West Africa that meet our criteria. Cash generation, long life assets with near field upside. Again, we would expect to execute such transactions without the need for equity. But AFENTRA's story is not just the M&A story. We continue to optimize and grow value from our core assets. The more we work on the asset together with our partners, the more comfort they have that we have ability to produce 30,000 barrels gross and as high as 40,000 barrels in the coming years. We achieved a 140% replacement ratio over the 18 months from our assets, and we're working hard to demonstrate that our reserve base has even more to come and show in the near to longer term. With our strong balance sheet in place, all asset investments are fully funded. We're also building on our Angola presence. Having completed the Azule acquisition, we also expanded into onshore via 45% interest in blocks CON 15 and CON 19. And that positions us as a long-term partner in Angola.
Energy equities have been under pressure recently. What makes AFENTRA stand out in the current climate?
Look, AFENTRA has not been immune to the recent market headwinds. However, our financial strength assists and leaves us well positioned to outperform when sentiment returns. We continue to maintain operational and financial discipline, and as well-capitalized and focused independent, AFENTRA will continue to deliver on its objectives, including the ongoing asset redevelopment campaign, the onshore Kwanza expansion, and its financial delivery underpinned by our hedging program. As a company focused on growth, current volatility and downward pressure on commodity prices present some interesting M&A opportunities, which we very much hope to capitalize on. Since inception, we have not diluted our shareholders, having funded all transactions through the combination of existing cash resources and structured RBL and working capital arrangements, and we aim to replicate similar funding structures for any future transactions. In summary, it has been a transformational year. We're in a strong financial position and in an opportunity-rich market.
Thank you, Anastasia, and congratulations on a very strong financial year.
Thank you.